Good evening, everyone, and welcome to our webinar. Please let me know if you can hear me on your end. You can just type in the chat box if you're able to hear me, and we will be ready to begin the webinar.
Yes, you are audible.
All right, thank you. Thank you, Victor. Good evening, everyone, and welcome to the Tax and Customs webinar for Kenyans living in the diaspora, living in Germany. My name is Elsie Stevens. I will be your moderator for this evening and for this session. Just a bit of housekeeping rules before we begin. If you experience any technical difficulties during the session, please just let us know through the chat. And very warm welcome to all our attendees who are joining us from Germany. Karibuni sana. It is so lovely to see you. Thank you also to the Ministry of Foreign and Diaspora Affairs for mobilizing our Kenyans living in the diaspora to join us this evening. We are grateful for you. Thank you also to all our panelists and the technical team from KRA, both domestic taxes and Customs and Border Control team. We are so eager to see your presentations. Thank you and karibuni sana. I'd like to warmly welcome you to this Tax and Customs webinar for Kenyans living in Germany. And this particular webinar has been organized so that it can provide information on tax obligations, information on customs procedures, and investment-related matters pertaining to Kenyans living in the diaspora, particularly in Germany. We're very pleased to have you join us this evening. Once again, my name is Elsie, and I'll be a moderator for today's session. Before we begin, a few housekeeping rules. The first, I'd request, please keep your microphones muted throughout the presentations. And you may post your questions as early as now in the chat box during the session. We had sent out a pre-webinar survey questionnaire and we were able to sample some of the questions. So should you feel you want to type out your questions right now, please feel free to do so. One of the technical team members will be able to answer you. And if not, then we can always tackle your questions during the question and answer section. All right. Without further ado, I'd like to invite Mr. Barile Wario. He is our acting commissioner, shared services, for him to come in and deliver the welcoming remarks. Karibu, Commissioner.
Thank you, Elsie. Confirm I'm audible.
I confirm you're audible. Yes.
Good evening, diaspora family. Good to have you for this engagement with our diaspora in Germany. And I would also like to acknowledge the presence of our partner, Ministry of Foreign and Diaspora Affairs. I appreciate your time. My name is Barile Wario, Acting Commissioner for Shared Services, representing Commissioner Nancy for this webinar. Personally, I've been a diasporan, worked, studied, and lived overseas for many years, and recently returned to the country last 5 years ago to come back to our country to help and support the objective of progressing the country. So I'm glad to be meeting with you virtually, and you're all welcome. So allow me now to go to my official remarks, and you're all welcome. So on behalf of the Kenya Revenue Authority, it's my great pleasure to welcome you to this engagement with Kenyans living in Germany. I wish to acknowledge our partners from the Ministry of Foreign and Diaspora Affairs, with whom we continue to collaborate in creating platforms that keep our diaspora community informed, empowered, and connected to Kenyans' development journey. Today's session is particularly meaningful because it marks the second engagement between KRA and Kenyans residing in Germany, following a recommendation from the Ministry of Foreign and Diaspora Affairs. This continued dialogue reflects our shared commitment to strengthening the relationship between Kenya and its diaspora community. Allow me to begin by recognizing the important role Kenyans in diaspora play in our nation's progress. Your contribution through remittances, investments, skills transfer, and the global network significantly support Kenyans' economic growth and development. As a country, we deeply value this partnership. At the Kenya Revenue Authority, our responsibility goes beyond revenue collection. We are committed to providing clear, accessible, and responsive services that make it easier for Kenyans, both at home and abroad, to meet their tax obligations and engage with government systems seamlessly. Platforms such as this allow us not only to share information, but also to listen to your experiences, concerns, and suggestions so that we can continually improve service we provide. This engagement will focus on several important areas that are particularly relevant to Kenyans living and working in Germany. These include simplified tax solutions, including return filing processes and the support available through KRA's contact center and digital platforms. The other area we'll be covering is double taxation agreements and how they affect Kenyans earning income in Germany while maintaining obligations in Kenya. Custom matters, including procedures for returning residents, as well as export and import processes for those investing or doing business with Kenya. Our goal is to ensure that you have a clear guidance and practical information that will help you navigate tax and custom matters confidently and efficiently. Most importantly, this session is not only about sensitization, it is also about dialogue. We encourage you to actively participate, ask questions, and share your perspectives. Your feedback is essential in helping us build a tax administration that is efficient, transparent, and responsive to the needs of all Kenyans, wherever they may be in the world. As KRA, we remain committed to service excellence, digital transformation, and continuous engagement with our diaspora community. We want you to feel connected to Kenya's institutions and confident that support is available whenever you need it. Once again, thank you for taking the time to join us this evening. We look forward to a productive and engaging session. Thank you and welcome all. Back to you, Alicia.
Thank you. Thank you so much, Mr. Ario. Thank you for those insightful, welcoming remarks. And I do agree, platforms such as this help KRA to disseminate information as well as listen to experiences coming from the diaspora community. Karibuni sana, all of you who are joining us from Germany. And I'd invite us to just remember that we have the icon at the bottom of your screen labeled Q&A. Please feel free to drop in your questions as early as now. Our technical team are ready to take your questions and we can be answering them as the sessions go. Now, before we invite Ministry of Foreign and Diaspora Affairs, A quick icebreaker for those of us who are joining all the way from Germany. I'd like to know, what city are you joining us from in Germany? Are you joining us from Berlin, from Frankfurt, from Munich, or from Hamburg? It would be great to see how widely the Kenyan diaspora community is represented this evening. All right, now we move on to the next segment. It is my pleasure to invite Ms. Lillian B. Watts. She's the third secretary, Ministry of Foreign and Diaspora Affairs at the State Department for Diaspora Affairs. Ms. Lillian will share her remarks on the diaspora engagement and also investment opportunities for Kenyans living abroad. Ms. Lillian, the floor is yours. Karibu sana. Ms. Lillian, karibu, the floor is yours. All right, it seems we may have briefly lost connection with our speaker. Let's just allow her to join briefly. Let's give her a minute or so. I can see we have Dave Brono in the chat. He's saying he's joining from Stockholm, Sweden. Diaspora community, I welcome you to just let us know where you're joining from. We would love to see how well the Kenyan diaspora community is well represented as we check on Ms. Lillian's connection.
Thank you so much. Sorry about that. I hope you can hear me well. Can you hear me?
Yes, we can. Yes, we can, Ms. Lillian. The floor is yours.
Okay, thank you so much. My name is Lillian Biwot from the State Department for Diaspora Affairs in the Ministry of Foreign and Diaspora Affairs. I'm a third secretary. And I'm standing in for Director Humphrey, who was not able to join us today. But on behalf of the State Department for Diaspora Affairs, I'd like to warmly welcome you all to this important webinar on tax and customs for Kenyans living and working in Germany. Allow me to sincerely appreciate the Kenya Embassy in Berlin, headed by Ambassador Mokaya, was not able to join us today for official other duties that she's engaged in. And for these, for the invaluable support in mobilizing Kenyans across Germany to participate in this important session. Your efforts in bringing our diaspora community together are highly commendable. I would also like to extend our sincere appreciation to the Kenya Revenue Authority, to whom we continue to partner with the State Department for Diaspora Affairs in facilitating these engagements. Such collaborations are essential in ensuring that continuous dialogue and welfare and rights of our diaspora are met. And to address these issues, this is one of the engagements that we advocate for. To all the participants joining us today, thank you so much, our diaspora, for taking interest in this session and also for sparing your time to be part of this discussion. I know some, when people go to Maju, they only think of work and make money. But today you sat and you made a decision that you want to join this session, and you're most welcome. We also want to encourage that you participate actively during this session. Please feel free to ask any questions, as the KRA officers will also are present to address any concerns or clarification you may have regarding this particular topic. Once again, welcome and enjoy the session. Thank you so much.
Thank you so much, Ms. Lillian, for those remarks. And we'd just like to also thank the Kenyan Embassy in Berlin. We can hear how they have been very instrumental to our diaspora community. Without further ado, we want to keep time and get straight into the presentations. We will now move to the technical presentations, and first we'll be beginning with our tax matters. Remember, there's a Q&A icon at the bottom of your screen. You can use that to post your questions as early as now. Also, let us know where you're joining from. We would like to engage with you, and remember to share the link with the fellow Kenyan community within Germany and the different cities within Germany. We would love to have them on board. Now, this session will be delivered by Ms. Peris Mukoko, who will guide us through key tax issues relevant to Kenyans who are living abroad, including compliance and the available services. Ms. Mukoko, you may now take us through your presentation. You have the floor.
Thank you, Elsie. Greetings all. I'll be taking you through the Kenyans living in Germany diaspora presentation in line with the domestic taxes, and of course I'm joined with my colleagues from the different departments answering some of the questions in the chat box. That will be Mr. Silas Ore, together with Dorina Dorica and also Mr. David Busaule, and other colleagues who are also notably within the session today. Just to give you a quick overview when it comes to matters taxation. You always know, as Kenyans in the diaspora, that is Germany, the main taxes that may apply to you are usually direct taxes. These are usually taxes on your income, and they apply if you are a resident or a non-resident who has income earned in or from Kenya. Then we also have indirect taxes, whereby these include VAT and excise duty, and they are charged when you buy or import certain goods and services. Now, when it comes to income earned in Kenya or from Kenya, you find that in Kenya, tax is charged on income that is earned in Kenya or from Kenya. However, there's some few exceptions, which are one, you can be taxed on employment income that is earned from outside Kenya, in this case, Germany. And your pension income can be taxed in Kenya if it relates to work that has been done in Kenya, even if it is received from outside Kenya. And the third one is when you run a business both in Kenya and outside the country, you are required to pay tax in Kenya on the entire business income. Please note that if you earn income from Kenya or from outside Kenya, but falls under the above three exceptions, you are required to declare and pay the tax on that income. Now, when it comes to income tax residency for individuals for tax purposes in Kenya, if you, one, have a permanent home in Kenya, that is a place where you actually live or a place available for you to live in. It can also be any place that the commissioner considers to be where your personal or economic interests are closest. The second one is were present in Kenya. That means you were in Kenya for a period in a particular year of income under consideration. The third one is that you have no permanent home in Kenya, but one, were in Kenya for a total of 183 days or more during a given year of income, or were in Kenya during the current year and in each of the 2 years before it for an average of more than 122 days per year. When it comes to the income tax residency for non-individuals, this are, for example, companies. You find that the residency for tax purposes in Kenya is determined as follows. One, the entity is incorporated in Kenya, meaning it was registered in Kenya, or its management and controls is excised in Kenya, or it is declared a resident by the minister through a gazette notice. Now, when it comes to individual income taxes, you find that that basically falls under employment income, pay as you earn, as the acronym of that is PAYE. You find your employment income is taxed on a graduated scale. So you find the first column shows you the monthly bands, the second column shows you the annual bands, and the third column gives you the rate of the taxation. So you find for the monthly income, which is the first 24,000, is taxed at a rate of 10%, which if you look at the annual, that is 24 times 12, and you'll be able to get the rate of tax. Then you find the next 8,333 is taxed at 25%. The next 467,667 is taxed at 30%, and on the next 300,000 Kenya shillings, it's taxed at 32.5%, and all income above the 800,000 Kenya shillings is taxed at 35%. Please note that there's always a personal relief for a monthly rate at a monthly rate of 2,400, and also an annual rate of 28,800. That's basically 2,400 multiplied by 12. You can claim personal relief, insurance relief, and affordable housing relief. Your employer acts as a pay-as-you-earn agent, whereby they deduct pay from your salary and remit it to KRA every month. That is on or before the 9th of each month. Now, for residential rental income, you can opt for monthly rental income regime, that is MRI, the monthly rental income, where your gross rent is taxed at a monthly rate of 7.5%. And in the case of non-residents, there's a withholding tax that is applied on a gross rent at 30%. For corporates, income tax is taxed at a flat rate of 30% on profit from their business. Other income taxes fall under withholding tax when a percentage of a certain incomes is deducted by the withholder and submitted to KRA before you are actually paid. That is where you're able to get the withholding, the amount that is actually withheld and remitted. The amount of the money deducted depends on, one, the kind of business that you do, whether you're a resident or a non-resident. Some of the examples that can be able to just expound on the withholding tax are management, professional, or training fees, which is more than 24,000 Kenya shillings per month. Residents actually charge at 5%, while non-residents are charged at a flat rate of 20%. Please note that interest rate is charged at 15% for both residents and non-residents. And then we have the contractual fee, which is charged at 3% for residents and 20% for non-residents. What is final tax? Now, please note that withholding tax is not final tax. Therefore, you have to ensure that, one, you declare your withholding tax credit when filing your annual return. You pay any tax balance by the due date. Now, there are, however, few instances when withholding tax is final tax. One, that is when the tax is deducted from a payment made to a non-resident person, and when the tax relates to winnings, qualifying interest, qualifying dividends, or pensions paid to a resident persons. Those are instances where withholding tax is fine. Now, we come to the double taxation avoidance agreements. Acronym is DTAAs, whereby Kenyan tax law allows you to claim relief or deduction for taxes that you have paid for in another country, so you do not get taxed twice on the same income while living or working abroad. Now, for the double taxation avoidance agreements, you find these agreements between Kenya and other countries that set out how your income will be taxed in each country to ensure you are not double taxed, and to make it easier for you to work, invest, or do business across borders. Germany is actually one of the countries which have actually signed a double taxation agreement with Kenya. So you find that we have 15 signed DTAs with Zambia, South Africa, Seychelles, Iran, Qatar, United Arab Emirates, Korea, Iran, Norway, Sweden, Denmark, Germany, Canada, United Kingdom, and India. If in instances there are no DTAs, this is where double taxation may occur. However, as a Kenyan citizen, you can claim relief if the income you earned abroad is from employment, entertainment, or sports or athletic activities, and that income is also taxable in Kenya. Please note, for this to apply, you must provide proof of the tax paid abroad for the relief to apply. Tax compliance. Now, when it comes to tax compliance, it focuses on 4 pillars. The first one is your registration, whereby you obtain a PIN through the iTax system. And if you are a resident or a non-resident earning income from Kenya, and register all applicable tax obligations such as VAT for those dealing with vatable supplies. The second pillar of compliance is filing, meaning that you have to submit your tax returns according to your income earned and registered obligations. Please note that late filing always attracts penalties. The third pillar of compliance is payment, meaning that you settle any outstanding taxes by the due date. And please note that late payment also attracts penalties and interest. The fourth pillar, which is crucial, is always accurate reporting. You provide the correct details or information in your tax returns, and we as KRA conduct compliance checks and audits to confirm the accuracy of returns. Please note that KRA has made it easier for you to stay compliant by simplifying our processes, which are now fully automated from registration to reporting through the iTax system. And we have also designed a comprehensive compliance management program that categorizes taxpayers into various segments, or rather sectors, which allow us to better understand your needs and provide strategies tailored specifically for you. Just to touch on or rather to add on the simplified solutions that are currently also ongoing. We have the simplified solutions where you have a chatbot via our WhatsApp, and it's actually on the website. And you also have the simplified solution of dialing *222#, whereby you're able to also get through to get some of our KRA services, meaning that we are just one touch away. Thank you very much. At this juncture, I don't know if there are any questions that you'd like us to address, and we can also use the chat box to actually address your questions, or the Q&A sector, so that we're able to go through that. Elsie, I'd like to hand over back to you as we take in any questions. Thank you.
Thank you so much, Madam Paris, for your insightful presentation. And it's also good to know that KRA currently has the DTAA with Germany, so that's also very beneficiary for the Kenyans living in the diaspora. We would like, in the interest of time, to just move on with the presentations, but our question and answer session will be immediately after the presentation, so worry not. And I can see we have many participants who are still actively following the discussion, which is great. We have Cyrus. Cyrus is joining us from Frankfurt. He says he's representing the Kenya Diaspora Alliance in Germany. Karibu sana, Cyrus. We also do have Mr. Bernard Wekesa. Mr. Wekesa is joining us from the Kenyan Embassy in Berlin. Thank you so much. Thank you so much. And we are so pleased to have you join us this evening. All right. Please remember that we are still actively receiving your Q&A questions. You can post them in the chat box. We have an icon at the bottom of your screen, Q&A. You can post them there. We will either take them at the end during the Q&A session, or if one of our technical team wishes to respond, they can do that right away. All right, we now proceed to the next presentation, which will be focusing on customs matters. Remember, in the beginning, I shared that we did do a pre-webinar questionnaire survey, and this is how we were able to gauge some of your interest areas, some of the questions that you have, and these presentations were geared and are still geared towards that. This session will be delivered by Ms. Brenda Misheni, who will provide insights on customs procedures, regulations, and services relevant to Kenyans living in the diaspora. Ms. Misheni, you now have the floor. Please join us. Thank you.
Hello, everyone. I hope I'm audible.
Yes, Brenda, you are audible. You have the floor.
Thank you, Elsie. As you've been told, my name is Brenda Mishini, and I'm going to be taking you through the presentation from the Customs Department. The presentation is going to just inform you on the role of Customs and Border Control, cargo clearance process, exemptions on arriving passengers, returning residents and returning diplomats, diseased persons, personal effects and motor vehicles, and the frequent scenarios and integrity. Customs and Border Control Department is one of the departments under the KRA, Kenya Revenue Authority, and we deal with imports from home use, transit, transshipment, export of goods, and also persons, vessels, aircraft, and clearance. So the clearance process starts once you, as the importer, appoint a clearing agent who must be licensed by the Commissioner of Customs. The agent is able to access the custom systems to make declarations on your behalf and also pay the taxes, although you as the importer can also pay your taxes by yourself. All taxes are paid at the bank or by mobile money, the USSD code. Declarations are supported by relevant import or export documents for corroboration of a number of parameters, which include the values, quantities, and the country of origin, and the requisite permits where applicable. Tax rates and overall taxes are paid. So we have a list of customs clearing agents, which can be obtained from our website. Please ensure that any custom clearing agents that you're picking has been listed on the website, and that the license is valid for that specific period. Some of the charges include demurrage charges, and this demurrage is a penalty that is given when the container stays longer than the free period allowed by the shipping company, by the shipping line of the company. And this is counted after the clearance by Kenya Ports Authority, and normally it's between 3 to 7 days. We have clearing agent fees. We have port charges, which are CFS charges. And for the CFS, they are the privately operated container freight stations. And then we have other fees and levies payable by permits as per the prospective partner government agencies. Now, these agencies include KEBS, who are in charge of inspecting and standard verification. We have KEFIS. We have the NEMA, and they have the Pharmacy and Poisons Board. As an arriving passenger, you are allowed some exemptions, and you enjoy property of and accompanying the passenger for the personal or household use of the passenger in a partner state, and of such kinds and in such quantities as the proper officer may allow, of course, by following the ECMA. Then the following goods are, however, not exempted. So we have alcoholic beverages of all kinds. We have perfumes, we have spirits and tobacco and products thereof, except where they are imported in allowable quantities. And we're going to see that. Then you have fabrics in piece. These are fabric textile materials. We have any goods for sale or disposal to other persons. We have goods purchased for personal use whose value exceeds 2,000 USD. And then we have gifts. Limitations on arrival. We have alcoholic drinks, perfume, cigarettes for exemption. Duty will not be levied on the following goods imported by and in possession of a passenger. Like we've said before, there are some limits, some exemptions, Spirits, including liquors, not exceeding 1 liter. Then you have wine not exceeding 2 liters. We have perfume and toilet water not exceeding in all 1.5, of which not more than a quarter may be perfume. Then you have cigarettes, cigars, cheroots, cigarillos, tobacco, and snuff not exceeding in all 250 grams in weight. Now we're saying any excess over and above the stated quantities that is allowed, you'll be charged the applicable taxes according to the East African Community Common External Tariff 2022. Then we have what you need to declare to customs on arrival in Kenya. Items that you have inherited while abroad, items you bought in duty-free shops on the ship or on the plane beyond the allowable limit. We have repairs or alterations to any items you took abroad and then brought back, even if repairs and alterations were performed free of charge. We have items you brought home for someone else, including gifts, items you intend to sell or use in your business, including business merchandise that you took out of Kenya or on your trip. Any currency above 10,000 USD or its equivalent must be declared at customs upon arrival. Then you have goods purchased by the passenger for own use and whose value exceeds 2,000. And this came into effect on 1st July 2024. So you must declare the items at the price that you paid for. If it was a gift, at its fair market value. We have definition of a returning resident. So a returning resident is a person changing residence from one place outside Kenya to a place within Kenya. And for this reason, a Kenyan living in diaspora, in this case, Germany, and returning home would qualify as a returning resident. You will be granted, so this will be granted only to returning residents who have attained the age of 18 years. The personal effects must be imported within 3 months of arrival or such further period as the commissioner may allow on application by the applicant, but not exceeding 360 days after your arrival. We have exemptions available for returning residents. We have your clothes, personal and household effects, one personal motor vehicle. This is excluding buses and minibuses owned and used by the returning resident for at least 12 months prior to returning. So the exempt taxes are import duty, we have excise duty, VAT, we have IDF, this is import declaration fee. The RDL, which is the Railway Development Levy, is not exempt and is payable at 2% on the CIF. And then we have what happens if you need to change residence after returning and having enjoyed exemption on personal effects. So any person who has been granted an exemption and wishes to change their residence to a place outside the partner state within 90 days after your arrival, you will export your personal or household effects within 30 days or such further period not exceeding 60 days from the date you change your residence to a place outside a partner state, or as the commissioner may allow. Otherwise, duty becomes payable from the date of importation. Then we have importation of motor vehicles. A returning resident is allowed to import one duty-free or tax-free motor vehicle. This is again excluding buses and minibuses of seated capacity of more than 13 passengers and load carrying capacity exceeding 2 tons. So this is subject to meeting the following condition. You must be returning to Kenya permanently. That is, you're changing your residence and not just making a visit. You must show proof of ownership and use of the motor vehicle for at least 12 months before you return to Kenya, prior to returning to Kenya. The motor vehicle must comply with the KEBS requirement, and this is, it must be a right-hand drive and not more than 8 years old. We have importation of a motor vehicle. This is a continuation. The motor vehicle should be imported within 90 days of returning and not more than 360 days as may be approved by the Commission of Customs. The motor vehicle should be consigned in the name of the returning resident, and the person shall enjoy exemption on only one motor vehicle. You shall not be accorded an exemption on another motor vehicle subsequently imported within a period of 4 years. And where the motor vehicle is imported after the 4 years, all duties on the earlier exempted motor vehicle must be paid. Taxes are payable upon disposal to a non-exempt person. So in this case, if you want to sell the vehicle you brought in, before you dispose it or sell it to someone else, you must pay taxes that were foregone before. All right, a Kenyan resident returning from a country that operates a left-hand drive, which I believe Germany does, you shall be allowed to import a replacement right-hand drive vehicle from any other source, subject to the following conditions. The person must be a bona fide changing resident, that is, you're permanently from a place outside Kenya. The person must fulfill all the requirements for importation of personal and household effects by returning residents, as we have discussed before. And the returning resident must prove that he or she owned and personally used the left-hand drive vehicle in the country of former residence for a period of at least 1 year prior to your return. The returning resident must provide proof of disposal which is or transfer of ownership of the previously owned left-hand drive vehicle before changing residence from the former country of residence. The current retail selling price of the right-hand drive replacement vehicle shall not exceed that of the previously owned left-hand drive. So if you're looking for a replacement, the value should be, it should not go above the one you're replacing. The replacement vehicle must comply with the Kenya Bureau of Standards requirements, which is the 8-year rule. The car should not be older than 8 years. For exemption, the exemption from import duty, VAT, excise duty, IDF is as specified in the respective tax laws. We have returning diplomats after their tour of duty. Returning diplomats are entitled to exemptions as returning residents and are subject to the same provisions and limitations on quantities and timelines as applicable to returning residents. Then we have personal effects of a deceased Kenyan who died abroad. In the case where you have a person who has died and the personal effects want to be brought back home, the used personal effects subject to such limitations as the commissioner may impose are allowable. The items should not be for resale, and they have been they should have been the property of the deceased person, have been inherited or by bequeathed to the person to whom they are consigned. And the personal effects include one motor vehicle which the deceased person owned and used outside a partner state, and letters of grant issued by a court of law or a certified will. Now, observations that you have drawn from incidences involving returning residents, we have undeclared goods whose value exceeds to $2,000, gifts for family, friends, which includes mostly we find phones, perfumes, alcohol. Our returning residents don't adhere to the allowable limits, and sometimes you don't seek extension of time within which to apply for the exemption. And you're applying this to the Commission of Customs. Not entering goods on time in line with Section 34 of ECMA, resulting in goods being placed in the customs warehouse and later being auctioned. And then we also have people not paying taxes upon disposal of duty-free motor vehicles. We also have non-declarations of currency of the USD dollars, monies exceeding 10,000 USD dollars on entry into Kenya. We also have Kenyans sending donations or importing donated goods and exceeding the exemption of duties or taxes because it is a noble cause. Donations are taxable by law. Then we have residences who say not knowing that there are any charges apart from duty or taxes on imports. So the measures we have put in place include automation of KRA functions. This is through the ICMS and iTax. We are creating awareness on integrity programs for staff and stakeholders like we're doing now. We have KRA integrity policies in place. We have the taxpayers charter that spells out your rights as a returning resident and the obligations of taxpayers. And we also have a corruption reporting mechanism where you can go to iwhistle.kra.go.ke. We have a hotline. You can also do an email. You can also do an email to CSC. And we also have an informal reward system. How can you obtain information from what you have shared or even for more? You can make inquiries before or during importation through the KRA website. We have social media through Facebook, Instagram, X. You can email customshelpdesk@kra.go.ke, policycbc@kra.go.ke, and we also have a call center at kra.go.ke. You can call our call center through the phone lines provided, or you can visit the nearest customs office at the entry point. For the acts, you can get them from kenyalaw.org, and you also have EAC gazettes on the EAC website. Please contact the respective PGAs for any specific inquiries on requirements for importation. Thank you very much. I'll hand over back to you.
Thank you. Thank you so much, Brenda, for that detailed presentation. Thank you so much for addressing some of the questions that our members from the diaspora community in Germany had been sharing. I had earlier mentioned that we did share a questionnaire and they were able to chime in and send some of their concern areas. And all the slides that you have covered have actually entailed most of the questions that were raised by our diaspora community. Thank you so much, Ms. Misheni. We will now move into our question and answer session. If you have not posted your question in the chat box, I encourage you to do that right now, because we're now getting into the question and answer session. We want to take time to answer most of your questions, if not all. And here participants will be able to have an opportunity where they can seek clarification or raise questions regarding the presentations. We had presentations from Ms. Mukoko and Ms. Brenda as well. So both domestic taxes and customs and border control related questions. We will be more than happy to take your questions. I will now begin with some of the questions that have already been submitted. We had Dave from the Q&A icon who had shared a question. Please allow me to just voice it out. Dave was asking a question relating to exemptions, and I'll just read it for the community. Thank you for opening the question and answer. Dave says there seems to be a hidden rule pertaining to returning residents exemptions, which sets a 90-day cumulative limit on visits to Kenya in the preceding 2 years before their permanent return. I only found out about this rule when I approached an agent, a clearing and forwarding agent, to help with sourcing of a replacement vehicle. I could not find it on the KRA website and in the act on which these exemptions are based. Could you please expound on the letter and spirit of this rule? It seems punitive in that it limits how many times and for how long a bona fide non-resident can visit their home country for reasons such as illness, bereavement, parental leave and vacation, etc. Is this a binary rule or is it subjective? We do have a response from our Customs and Border Control technical team. I'll read it out, but I would also invite a member from the technical team just to, echo this question further. Paragraph 5 of the 5th schedule of the ECMA, which is the East Africa Community Customs Management Act, 2004, provides for the exemption of personal effects, including one motor vehicle to a returning resident who is bona fide changing residence from outside of Kenya to a place in Kenya. The exemption is conditional in that the taxpayer must be permanently changing residence to Kenya, and they must also have personally owned and used this motor vehicle outside an EAC partner state for at least 12 months. I do recall that Ms. Misheni did take us through some of those conditions. But Rono echoes further and says his question was the undocumented 90-day cumulative limit on visits to Kenya over the preceding 2 years. I'd invite a member of the Customs and Border Control technical team, either Ms. Brenda or Ms. Mukoro, who had earlier contributed to the conversation. Please unmute your mic and let's kick off this question and answer session. Karibuni. Ms. Misheni or Ms. Muhoro or another member from the Customs and Border Control technical team.
Hi, Elsie. This is Margaret.
Thank you. Karibu, you have the floor.
Yes, thank you. So I think I have expounded further for Mr. Ronald. There is no such rule in place when it comes to accumulative visits, but the only time 90 days come into play is when we are looking at the timeline between when the resident came back to the country and when the motor vehicle is imported into the country. And that is where the Act provides that this importation should take place within 90 days of the resident having returned to the country. I hope that is understandable and satisfactory.
Thank you. Thank you, Ms. Muhoro. Thank you for that comprehensive response. I can see Mr. Rono asked another question. It has been answered in the chat box, but I'll also just voice it out for the rest of the community. Is the 2,000 USD limit per article or total value of personal effects for returning residents? And Mr. Ruben Walufu, who's from our Customs and Border Control technical team, has responded, the 2,000 US dollars is cumulative on all the items, not just one article. All right.
Elsie.
Yes, Mr. Walufu.
Thank you.
Good evening.
Thank you, Elsie. I just wanted to expound on what Margaret has already elaborated, that what Mr. Rono was asking, This one was done away with. Actually, maybe the agent he was talking to may not have been aware that there were some changes in the law, and that particular aspect was done away with. I know it used to read that prior to coming home, you should not have made those frequent visits. It was like a risk mitigator, but it's something that has already been done away with. So, Rono, you should not fear to bring home your vehicle or your personal items. What we have given you as per the 5th schedule, Part B, is the current law. This is the law that is applicable as of now. Thank you.
Thank you, Mr. Walufu, for that detailed clarification. And thank you, Rono. We do hope that you have been satisfactorily answered. I will carry on. Please remember, if you have not posted your question, please do so in the chat box. I can see some very great engagement in our chat box. In the interest of time, we will kick off right into our question and answer session. We had some questions that we had sampled, and then thereafter, we will ensure that every question asked during this webinar has been tackled by our technical team. Now, what tax-related topics would you like KRA to address during the sensitization session, during this tax and customs webinar? This is some of the questions that were posted by our members in the diaspora community. And the first is, how does KRA help people who have been underlying cases of ex-bosses in Kenya who use the information of the employee to open a company which they used for their own good to make money and left the ex-employee to pay their taxes? Okay, this question falls under domestic taxes, and I'd invite Ms. Peris Mukoko to assist us in tackling this question. Peris, you do have the floor. Karibu.
Thank you very much, Elsie. In regards to that first question, if the person can kindly just provide us with more details, then we'll be able to escalate it further and deal with the concrete aspect in terms of what it entails, and then we'll be able to guide them accordingly.
All right, thank you. Thank you so much, Ms. Mukoko. If the member who asked that question is in this webinar, we'd encourage you to share that information requested that you may be able to be assisted. The next question, tax obligations for dual citizens residing abroad. How individuals who
Elsie, you're breaking.
Sorry for that. Let me take the question again. Tax obligations for dual citizens residing abroad. How the Kenya-Germany DTAA, the Double Taxation Avoidance Agreement, applies to dual nationals versus single nationality Kenyans. That's the first part of the question. 2, filing requirements for individuals already tax residents in Germany, and the documentation that is needed to for claiming foreign credits under the DTAAs. Additional guidance is required on reporting foreign employment income and self-employment across the multiple jurisdictions would be valuable. Now, this is a deep question. It has different sections and segments, so I'll just throw it back to a domestic taxes technical team. I'd like to invite Ms. Peris Mukoko to just guide us on who will be answering each question asked. Karibuni.
It has 2 parts, and we've divided. So Ms. Doreen and Mr. Silas will be handling that question.
Thank you so much. So I'll start by handling the first part of the question. And specifically, this is on the issue of tax obligations for dual citizens living abroad. So from what Madam Perez took us through, in the realm of tax, tax is chargeable on income that is accrued in or derived from Kenya. And basically, when we are looking at taxation, then what we are supposed to look at is the residence of the person and not whether the person is a dual citizen or not. So Madam Mukoko had explained how individuals are considered residents, the issue around having a permanent home, having been in the country in a particular year of income for 183 days, and of course the cumulative presence in the country of an average of 122 days. So basically then, when you are a resident, irrespective of whether you are a dual citizen or not, then there are taxes that will be applicable to you. Of course, you are also aware about the non-residents. There are taxes which are applicable to non-residents and we've been taken through. So basically, on taxation, what we are supposed to look at is the residence of that particular individual or corporate, and whether that individual or corporate has derived income in Kenya or from Kenya. Of course, there are also the three different streams of income, which we did indicate that are actually subject to tax, irrespective of whether you earn them in Kenya or abroad. So Madam Doreen will take the bits which are remaining in that particular question. So Doreen, welcome.
Thank you so much, Cyrus, for that clarification about dual citizenship. But however, when it comes to DTA, there's a part, since we have a DTA with Kenya, there's a part that talks about dual residence. You know, there's a difference between citizenship and dual residence for the purpose of tax. So when it comes to dual residence for a purpose of tax, there's a provision in the DTA that now gives a country which has a prior right to tax and determination of dual residency. So the parameters which is determined so that we know which country has the prior right to tax that particular income. So for example, under the Kenya DTA, that is under Article 4, Paragraph 2, it gives now it gives which country between Kenya and Germany would tax that income. For example, if you are dual resident for Kenya and Germany, first of all, we look, where do you have a permanent home? That's the first test we take. So if you have a permanent home, if it is established that you have a permanent home in both countries, then you go to a second test to determine which country then you are supposed to be taxed. And that now we look at the personal and economic relations you are closest to in the two jurisdictions. So if it is established again that it cannot be established where your personal and economic relations are, then you go to another test, which is called the habitual abode. That is where now we determine then where we determine which country we have. In the instances we cannot determine, then the two tax administration will come through MAP. There's a process called mutual agreement to determine where you're resident and therefore determine where you'll be taxed in. So that I just wanted to make that clarification about dual citizenship and dual residence when it comes to the DTA. Silas, I can see your hand is up. I don't know if you have something to say on that.
Sorry, Doreen, just continue. I think it's a mistake.
Now, on the second part of the question, there's about filing documentation needed in claiming foreign tax credits under the DTA, specifically on employment income. Now, it is very important to know that determination on employment income will be based on residence, the definition of resident. Where were you resident in that particular year of income. And Silas has elaborated on how do we determine residency in terms of Kenya under the ITA, and also Paris expounded that on more. Now we go to the DTA, what the DTA says about employment income. What the DTA says about the Kenya-German DTA says, the country where you exercise your employment is the country that is supposed to tax your employment income. So for example, if you are exercising your employment income in Germany, Germany has the right to tax your employment income. However, if in a particular year of income, you are a resident of Kenya, you came to Kenya, for example, for 183 days, or you have a permanent home and was present in Kenya, and then you will declare your employment income and the employment income you're earning in Germany. And then once you declare it while filing it, the next step, you will tax it at the Kenya rates. Now, if it is determined that the taxes that you paid in Germany were more than what would have been taxed in Kenya, then you cannot claim a refund. But however, if the taxes you paid in Germany were less than what you would have paid in Kenya, then that additional tax is payable in Kenya. Again, another important aspect to consider while you're filing, if you have property in Kenya, that property, you will pay taxes on it. It is not determined, it will not be determined on resident status. It will be determined on where that property is situated. Now, in this particular case, if, for example, you have rental property, then you'll have to declare that rental property in your filings. Then there is an issue of documentation needed when claiming foreign tax credits. While the iTax system does not have requirements for documentation, it is important to know that whenever we want to substantiate that those foreign tax credits that you have claimed on iTax are genuine, then a KRA officer will call upon you to during a compliance check to verify through the documentation of payment of those taxes you paid in Germany to substantiate that the taxes that you paid in Germany. So those documents should always be ready when we are doing our compliance checks. However, in the iTax system, we do not have it. I would love maybe Bisaule to expand more on how to do the filing. If Bisaule is on the call, can actually explain to us how the foreign tax credits are filed on iTax.
Thank you, Doreen. Am I audible?
Yes.
Okay. I think just picking where Doreen has left, yes, when you have a foreign employment income and you are resident in Kenya, as per the required resident requirements, you'll be required to file a resident return in Kenya, and of course through iTax. And when you're filing that return, there's always a question we ask that, do you have foreign income? And when you say yes to that question, a new sheet always opens up for the foreign income where you'll be required to declare your gross foreign employment income, and also you declare the respective pay credits or tax which was paid on that employment income in the foreign country. And as Doreen again says, if the tax rate in the foreign income is lower, then of course you might be required to pay the additional taxes by end of the 4th month here in Kenya. For you, in the end of April, you'll be required to pay the balance of tax. If probably you are working in Germany, let's say the tax rate in Germany is 25%, and probably your income is at 30% in Kenya. Of course, now there'll be a difference. If that, so the return will do that for you, and either allow you to file a return where the income is there is a tax due to pay, but of course not a refund. And also I think it's good what just Doreen has mentioned, if your tax deducted in Germany is higher, then Kenya will only require you to declare the tax deducted up to the tax which will have been paid in Kenya, so that probably you end with a return with a zero liability. Because again, Kenya may not be paying refunds for taxes which were deducted in a foreign jurisdiction. But iTax is well aligned with that. Both the web-based return and the Excel return will enable Kenyans in Germany who are residents to file that return and claim their respective foreign employment credits or payee deducted in Germany for that case. Thank you, and back to you. Okay.
Thank you so much, Bisaule. And I think now we've exhausted 1B, but whoever was asked, if you need more clarification, you can always come back to us. You can write to us so that we can also have a one-on-one on the same. Thank you. We can move to the next question.
Thank you so much to the domestic taxes technical team for tackling that question. That question was very layered. Began with Ms. Bukoko, and thank you also to Ms. Doreen Dorica, who also gave us a proper breakdown and gave us the difference between dual residency and dual citizenship as related to matters DTAA. Thank you also to Mr. Silas Ore and also Mr. David Busaule for informing us on how excuse me, on how iTax will be able to capture the foreign employment credits. Thank you so much. We'll move on to the third question. Why are KRA taxing every amount deposited in the bank? Do they consider the diaspora community who want to save back home? I'll invite Mr. Silas Ore to tackle this question. Karibu, you now have the floor, Mr. Ore.
Thank you, Elsie. So I'll handle that question as you've said. So just to start with, it is not true that KRA taxes every bank deposit. However, what is important to note is that should there be an audit on you or on the person, and KRA realizes that there are bank deposits which you cannot be able to explain their source, then KRA will be able to tax such deposits. Secondly, it's important to note that if you are able to explain, for instance, that those deposits are, or rather arose out of income that had been taxed, then KRA will not tax such deposits. If you are able to explain that probably the income in your bank account or the deposit is from income that is exempt, then KRA will not tax such deposits. So essentially, therefore, it is upon the person to substantiate the sources of the deposits and to explain whether taxes have been paid on such deposits or whether such deposits are exempt to tax. But it's not really true that for every deposit that you put in your bank account, that such deposits are subject to tax. Of course, we are cognizant of the role of the diaspora, our diaspora brothers and sisters, with respect to investment in the countries. Kenya get a lot of remittances from diaspora, and these remittances are used to develop the country. So KRA is cognizant of that, and what is only required is that when you are called upon, then you should be able to explain or to tell KRA that these deposits are from these sources which had been taxed. So I'll take back to Elsie so that she can continue with the other questions.
Thank you so much, Mr. Oure, and we continue to encourage our Kenyans in the diaspora community, continue to save back home, All right, we'll cross over to the next question, and these are iTax related questions. What challenges or concerns have you experienced as a Kenyan living abroad when it comes to taxation? That is what we were able to sample as a response from our assessment form. And the issue of nil returns, that's now not working. Well, happy for you. We have Mr. David Busaule who will be able to tackle this question. Mr. Busaule, you have the floor. Karibu.
Thank you, Elsie. Yes, the nil return aspect has been an emotive issue in the last few months, but I think it's good to clarify that for Kenyans who are residents in Germany, for Kenyans who work in Germany and they are resident in Kenya, of course, we are not expecting a nil return from you. Uh, so probably you're not the target market for the nil return. But having said that, we've not stopped nil return filing completely. What KRA is implementing through a first filing approach is we just postpone returns up to after so that it can continue after 1st April. So between now and between end of January and 31st March 2026, we've more of like postponed the filing of nil returns. But from 1st April, any qualifying resident, whether in Germany or in Kenya, maybe you are in Germany, probably you are not earning any income, or probably the income you're earning probably is you're not resident, so you may be allowed to file that nil return after 1st April 2026. But again, I think it is important to note that only those who don't have any taxable income, whether earned within or outside Kenya, should be filing the nil return. Otherwise, KRA is stepping up better use of technology and data, and probably you might find that through our various international arrangements we have with our different partners and agreements, we might have visibility of you earning income in Germany. Of course, now KRA might raise that discrepancy and probably now request you to make necessary amendments, or they proceed to make additional assessments. So yes, nil is there. It will come back on 1st April, only for the ones who qualify for nil returns. Okay, and it's only affecting the 2025 returns. So anyone filing nil for 2024, 3, 2, 1 going backwards, that one is still open. The only restriction was for the 2025 nil return filing. Okay.
Thank you. Thank you so much, Mr. Busole, for that clarification. We'll move on to the next question in the interest of time. There is limited information on handling transitions when moving back to Kenya. So they want to know about treatment of foreign assets, pension arrangements, and existing tax obligations. The lack of accessible resources, specifically addressing dual citizenship situations, makes compliance difficult to navigate. I'd invite Mr. Silas Ore to tackle this question. We'd like to know more about
Yes.
this question.
Thank you so much. So I'll handle part of that question specifically on foreign assets, then on pension, and to start with, let me start with pension. So from the presentation that Madam Perez presented, she did indicate that pension is one of those streams of income which a person can be taxed on, whether the pension is earned in Kenya or outside Kenya. So just a brief background of the changes to the law in the last 1 or so years. So currently, pension contribution is exempt up to a maximum, it's exempt from tax up to a maximum of 30,000 shillings. So essentially what this means is that if you are an employee and you are contributing to a pension fund, then a total of 30,000 shillings per month contributed to the pension fund will not be subject to tax. What this means, therefore, is if there is any contribution above 30,000 shillings, then that contribution will be subject to tax. So that is at the point of contribution. So it is exempt meaning that the employee is not taxed on that amount up to a maximum of 30,000 per month. Now, when the fund receives these contributions, of course, the contributions are invested. The fund earns either interest or dividends. So according to the law again, these earnings from the pension funds are also exempt. Then finally, we are talking about now the point at which a person wants to withdraw money from the pension fund. So it's also important to note that at that particular point, the point of withdrawal, again, that amount withdrawn is exempt from tax. But this is exempt based on meeting 3 different conditions. So such withdrawal will be exempt if the person is withdrawing that pension when the person is retiring. So if your scheme says you retire at 60, at 50, at 55, then you withdraw at that point, then that withdrawal will not be subject to tax. Secondly, there are situations when withdrawals are not subject to tax prior to the retirement age, but on condition that an employee is doing so due to ill health. So if you are to retire at 60, but you are unwell, you want to retire at, say, 55, then of course you are allowed to withdraw tax-free. Then the final condition is the duration within which a person has been in the scheme. So the law provides that for the withdrawal to be tax exempt, then you must have been in the scheme for at least 20 years. So what then this means is that if you do not meet these 3 conditions, and you are withdrawing money from a pension fund or a pension scheme, then that withdrawal will be subject to tax. So that amount of withdrawal will be subject to tax based on graduated bands which are provided for in the law. And the bands are a little bit lenient because it provides for higher amounts at lower rates. For instance, it does provide that if you are withdrawing, you've not met these conditions, then the first 288,000 shillings will be subject to tax at the rate of 10%. This is quite low compared with the pay-as-you-earn bands that we have in the law. Then, of course, the next 100,000 is taxed at the rate of 25%. Then, of course, any amount above 388,000, that is just the sum of 288 and 100,000. Any amount above that is taxed at the rate of 30%. So what is important to note here is that this pension will be taxed at the point of withdrawal if the person does not meet the 3 conditions that I mentioned. Now, so if, for instance, you are a resident individual, then you are in a pension scheme. Then the pension scheme is established outside Kenya. The amount of tax, or rather the portion of your pension that will be taxed in Kenya is the portion that relates to employment in Kenya or services rendered in Kenya. But remember, this tax, or rather this amount, this taxation only comes in if you don't meet the conditions that I have talked about. If you are a non-resident, then the pension fund is established in Kenya, then that pension is deemed taxable in Kenya. So those are the conditions for taxation of pensions. Now, the second issue is on the issue of foreign assets, taxation of foreign assets. So here we are talking about capital gains tax. So capital gains tax is a domestic tax which applies to immovable properties in Kenya, so not outside Kenya. So these are immovable properties which are in Kenya, and such gains are subject to a CGT or capital gains tax at the rate of 15%. 5%. So any of the assets, immovable probably, that you have outside the country, then will not be subject to CGT. Let me take this opportunity to answer a question that I've also seen in the chat that relates to capital gains tax. So it's about whether gains arising from the Nairobi Securities Exchange are subject to tax. So in order to develop the market, the gains which are arising from trades in securities in the Nairobi Securities Exchange are not subject to tax. However, there should be some license by the Capital Markets Authority. But there is a condition to it so that people do not tax plan around securities in the Nairobi Securities Exchange. So the condition is that if those gains are arising out of securities that you've held for 24 months and above, then those gains will not be subject to tax. But if you have gains and you are selling securities that you've not held for more than 24 months, then those gains will be subject to tax. So this is just to avoid planning around investing in the Nairobi Securities Exchange. So I'll take the meeting back to Elsie. I think I've covered the foreign assets and pension or taxation. I think there is a part that maybe one of my colleagues is supposed to cover.
Thank you, Ure. I just wanted to give a bit of the pensions in context with the DTA of Kenya, Germany. For instance, what the DTA provides is that, for instance, if a Kenyan was working in Germany and now wants to retire in Kenya after his employment or her employment, what the DTA provides that the country where he is resident at the time when the payments are made for pensions will be that country is the one that has the taxing rights over those pensions. So when you come and you become resident as tax resident in Kenya in your retirement, then the pensions arising from Germany will be taxed in Kenya. However, this DTA also gives a shared taxing rights, but it just says that what Germany can tax is only 5% of the gross pension payment. Just a little bit on pensions, on the same on what Silas has explained. Thank you. Back to you, Elsie.
Thank you so much, Silas and Doreen, for that detailed answer to the question. Also, thank you, Mr. Oure, for tackling the question on the Nairobi Securities Exchange relating to capital gains tax. Okay, we have our next question, and I love this question. Our member simply wants to know what taxes are required of me legally. This is someone who wants to be on the right side of the law, and we are grateful for that. I'd invite Ms. Mukoko to handle this question as you're almost coming to the tail end of the session. Karibu, Ms. Mukoko.
Thank you very much, Elsie. The question was, what do we tax legally?
The question is, the user wanted to know what taxes are required of me legally.
Okay, I'll just go back to the first presentation that we had actually done, just to give an overview of what taxation entails. What are some of the indirect taxes? What are some of the direct taxes that it encompasses? You as an individual, non-individual, and what it entails. And you find that if you're a registered person, as an individual, you're obligated to pay certain taxes. So it just gives an overview in reference to the Income Tax Act, the VAT Act, the Excise Act, and also just to guide the taxpayer based on how they're registered, if they're an individual and a non-individual. You find that some of them actually direct taxes. I'll just, for purposes of clarity, you find that when it comes to direct taxes, these are usually on your income. So your income, as my colleagues have actually expounded on, They apply if you're a resident or a non-resident who has your income and in or from Kenya, and you find some which are actually under indirect taxes that actually includes value-added tax and excise duty that was also covered within the domestic tax presentation and customs presentation, especially when it comes to the excise duty. And they're usually charged when you buy or import certain goods and services. And you see that when it comes to, for example, your employment income, so if it is earned from outside Kenya, you find that it can actually be taxed, just the same way that some of my colleagues are explaining. And that is just a bit of one to be able to understand what it encompasses. And when you come to income tax residency for individuals, you find what is the definition as per the Act in terms of who is a resident and how do they qualify as a resident for tax purposes in Kenya. So you find, as the way we had gone through definition of a resident in line with the Income Tax Act, and then you also go to the non-individuals, these are companies. So you find that for tax purposes, you find that if it is a non-individual, for tax purposes, it has to be an entity that was incorporated in Kenya, or its management and controls are exercised in Kenya, or it is declared as a resident by the minister through a gazette notice. So we start from the definition of who a resident is when it comes to the taxation matters, and then we're able to dive deeper into that. And then when it comes to other income such as withholding tax, we're able to see that there are different percentages that fall under, for example, the management professional fees, contractual fees as well, just to give an overview of what some of the percentages may entail, and also just understanding what final tax is when it comes to the withholding, what it qualifies, and that is just for us to give an overview. And of course, for taxation matters, you also have to understand that all these have to be anchored to the 4 pillars of compliance, that is registration, filing. That means you file on or before the due date, payment on or before the due date, and of course, accurate reporting, which in turn, we always conduct compliance checks and audits to confirm the accuracy. I hope that tackles an overview of what it entails. Elsie, back to you.
Thank you. Thank you. Yes, Ms. Mukoko, it does entail that. And I thank you for just reiterating and going back to your presentation. It just goes to show that we really do have our members in the diaspora community in Germany at the back of our minds when we're gearing and preparing for such webinars. So we're so grateful for that. We have one more question and I will read it out. This is from Dave Rono. Dave asks, is the e-dormancy or PIN dormancy, this is on iTax, still a valid way of avoiding the need to file nil returns if there is no taxable income in Kenya? Mr. Busaule, I'd invite you to tackle this question and answer Mr. Rono as we come to the tail end of this Q&A session.
Okay, thank you, Elsie. Yes, we have an option for dormancy. That means you still want to keep the PIN, but you don't need to keep filing nil returns. So you can make the application through iTax. It will go through approval. And for now, we only allow a dormancy, I think, of almost about 3 years. So we can't give an indefinite dormancy. So probably after every 3 years, you may have to renew and reapply going forward. But also we are working on a system enhancement where we will be able to allow you to switch your PIN with an obligation to a PIN with no obligation. Again, it will supplement the current dormancy as facility. So at least it will also help to, especially for those who they may probably never need the obligation, but probably they need the PIN because maybe some of their assets here in Kenya, probably they are mapped to that PIN. But so those two options could be applicable, but for now, apply, it goes through approval, then you don't need to file nil returns until the dormancy period is over. But you can also watch out for the enhancement on switching to PIN with no obligation if you have one in the course of the year. Okay.
Thank you so much, Mr. Bisole. We look forward to hearing that announcement so that our Kenyans in the diaspora community in Germany will be able to understand what they can do or what is required for them in order for them to apply for either the PIN dormancy or the PIN or switch from a PIN with obligation to a PIN with no obligation. All right, thank you very much to our speakers, who are panelists, our subject matter experts for the informative presentations. I'd like to thank Ms. Peris Mukoko, Ms. Doreen Dorica, Mr. Silas Oure, Mr. David Busaule. Those are from the domestic taxes team. And over to the Customs and Border Control team. Thank you to Ms. Brenda Misheni for that detailed presentation. Thank you to Mr. Ruben Walufu, Ms. Margaret Muhoro, and also Mr. Joel Ndege, whose insight have helped us to tackle some of the questions that have been shared here today. We thank you also to all our participants. Thank you for your active engagement, your thoughtful questions. This is what gives us the satisfaction, even just to have these engagements. It's knowing that our members in the diaspora community are able to engage with us. And please do be your brother's keeper. Please share this information widely to fellow Kenyans in the diaspora community, particularly those in Germany and also those outside. Now, as we come to the end of today's webinar, I have been given the honors to do the vote of thanks and the closing remarks, and I'm so grateful, and I'll do that. On behalf of the organizers, we'd first like to thank all our speakers once again and our participants for taking the time to join us this evening. We do hope that the information shared today has been useful and it will help you better understand tax matters, customs matters relevant to Kenyans living in Germany. Also the investment matters. You're more than welcome to invest back home. Thank you to the Ministry of Foreign and Diaspora Affairs, specifically the State Department for Diaspora Affairs, for mobilizing our Kenyans in Germany, for joining us this evening. Thank you also. I can see representation from the Kenyan Embassy in Berlin. Thank you so much. We do appreciate. I've seen a question being posted numerously in the chats. How will we share the presentations that have been done today? We commit to just amending them a bit, and then we will be able to share with the email address. I can see Mr. Wekesa has shared an email address, and we'll be able to do that at the earliest. Now, without further ado, ladies and gentlemen, we have come to the tail end of this tax and customs webinar. I'd like to thank all of you for joining once again, and please also be on the lookout for more engagements and more forums that we'll have organized with you in mind. And we look forward to also hearing your feedback. For me, I sign out. My name is Elsie Stevens. I have been your moderator for today. Have a wonderful evening. It is a rainy evening here in Nairobi, so we send you all the warmth back in Germany, and we look forward to engaging with you again in our future forums. Thank you and goodbye.
Thank you, Elsie.
Thank you.